All right, thank you so much for joining, guys. Today is August 21st. This meeting's for our LJ Realty team. And let's get started with the interest rates. The interest rates are on the lower end, right? We're seeing they're coming down. That's a positive thing for all the loan officers. It's a positive thing for all the real estate agents out there. So the interest rates right now, as of last week, according to Freddie Mac, they're hovering around 6.49 for your 30-year conforming loans. So, and compare that to your Mortgage News Daily, exactly what we said there, 6.49 for your Mortgage News Daily update as well. Okay, they're heading on the lower end, and that's what we want to see. If somebody's going with the FHA loan, maybe they can get 5.98 in today's market. Okay, whenever we're looking at these headlines, they simply mean that, hey, this is for your top tier scenario, meaning you can get these interest rates, but you need to have solid credit scores above 780. You need to put down payment of 25% or more. Right? If somebody's going to put down 3%, 5%, right, way less than 20 or 25%, then your interest rate is going to be a little bit higher. Okay. It also matters if you're going to live in that property or is it going to be an investment, right? If it's an investment, you're going to pay a little bit higher interest rate. Okay. And let's compare that. How's the change that's coming? So starting next week, we're going to be shooting new videos. That's going to be just giving you a breakdown. What is the change that we are doing? We are seeing in mortgage rates. So it'll be called LJ Mortgage Trends. And we're going to be talking to similar what we're seeing here, that if today's rates are 6.49, how's that compared to a day ago, which is lower around 4 basis points? How's that compared to a week ago, which is around 3 basis points? But look at the big change. About a month ago, it was around 40 basis points higher. And if you take a year back, then you're looking at 0.88% higher. Right, so now we are finally seeing the interest rates are coming down, and hopefully they keep coming down. And let's look at the 52-week range that we're seeing on the lower end, 6.34. The highest we saw was 8.03. Okay. So next, these inflation data that we're seeing here, the inflation rate is around 2.9% right now, and unemployment is 4.3. So as real estate agents, right, you guys should pay attention to these two numbers because they do matter, right? If inflation is going higher and higher, then your interest rates will not come down because government doesn't want the dollar to lose its value. So the inflation, they want it as low as possible. Their target is 2%, but right now we are at 2.9%. So that's pretty solid, right? Unemployment rate is at 4.3%. Government wants it below 5%. Okay, so these two numbers do matter. Next, I want to show you a affordability. So this is the actual file that we're closing. So the client who's making as a household income of $144,000, down payment of $60,000, their monthly debt was only $44. That shows that this client actually took care of their monthly debt. They know they have credit cards and everything. Let me clear that up so I can I can increase my affordability when I'm trying to purchase a house. Okay, the interest rate they received was 7.25. So again, even though interest rates are 6.49, why did this person get 7.12? Maybe their down payment wasn't enough, right? Maybe this was a 2 or 3 family house. The property taxes were $6,500. For this person, they purchased a house for $800,000, even though they qualified for a little bit more. Okay. Then we get this question a lot from our real estate agent and from our loan officer. Hey, I have a co-signer or co-borrower, and we ask them, why are you adding them? Right? They might say, hey, maybe they have income, so this way if you add their income to yours, you can qualify for a bigger house. And sometimes they say, no, they're just giving me a helping hand with the down payment. So does it matter if we have someone that's added as $30,000 income versus $30,000 down payment? There's a big difference. So I'm about to show you what does the difference look like. So in this scenario here, annual income is $100,000. Their down payment is $50,000. Okay. This person may qualify for $562,000 there. versus now, let's say we are adding $30,000 to the down payment. Everything else stays the same. Just by adding $30,000 to the down payment, look at the purchasing power. $30,000 exactly were added to that purchasing power. Before they qualified for 562, now it's 592. Okay? Now let's say we don't want to use this down payment for them, but we want to use their income as $30,000. If we add $30,000 to the income, bringing the down payment back to $50,000, just by adding that $30,000, look at the home price value they can purchase up to, $747,000. So more than $150,000 difference when you're adding someone's income versus adding as down payment. Okay, why does that matter? Because that down payment that you're putting down is just a one-time thing. But when you're adding as an annual income of $30,000, that means they can make the mortgage payment on time and they have increased their income dramatically here, right? Bringing their debt to income ratio down. Okay. Next, guys, is Gen Z. These are the people who are born between 1997 and 2012. Right? So anybody that's born around there, they're in their 20s right now. They might be getting out of college. This is what you want to target. So this way, when you're looking to promote yourself on different channels, and you're looking to say who you want to target, Z should be the one, because 30% of them right now are trying to make that move. So if they're living with their parents right now, they're trying to buy a house in the next few years, right? They might have a solid job. So some of these guys are just coming out of college and they have, let's say, $100,000 package or $80,000 package job offer. Even though they don't have that 2 years of experience yet, they may still qualify just because they got out of college and they have a degree to show that to the lender, and they have a job offer, right? They started working, they're going to be making, let's say, $80,000 this year. We can use their income as of that, right? Normally, if there's any cosigner that's added to your loan, we would need to see 2 years of their tax returns, right? 2 years of income. But not in this case if they're just graduating from college. So if someone is telling you, hey, I have my income, maybe I'm an Uber driver, but my daughter is about to graduate, she just graduated college and she got a job at a Chase Bank. Okay, fine. Show us their transcript that she actually graduated, and show us that the Chase job letter that she received. And then maybe you can add her to the income and increase their affordability. Okay. All right, guys. Next we have is the seller's market or buyer's market. If any client is asking you that, we know what to answer, right? Every market is different. Every area is different. So when we're looking at Hollis, New York here, that one is slightly advantaged for sellers. At the score they received was 34. So it's not a full seller's market there. Let's compare that to Floral Park. Floral Park is a lot more hotter, meaning any property that comes on the market, it goes fairly quickly under contract. So it's definitely a seller's market, and the rate they received was 45. So score increased from 34 to 45 for Floral Park. And if you go more deeper into Leviton in Long Island, the score that market received was 60. It's a strong seller's market. So if your client is asking you, is this a seller's market? Is this a buyer's market? Hey, let's find out. Let me do the research and see which area you want to be in, and let me see how is the market there, right? Your offers will matter. If it's a seller's market, you have to be more aggressive. Some of you guys want to waive the home inspection contingencies or bank appraisal contingencies in seller's market. But when it's buyer's market, you're doing quite the opposite. Okay, so do the research for your client before you make an offer. All right, guys. Next, then we have a few headlines here from Housing Wire. Number one is that inventory is up. We are seeing that in majority of the markets here, that inventory is increasing. Your job is to pay attention to the inventory. That's what we have to sell, right? The property that's coming on the market, that's what we're going to be selling. So your job is to basically make sure that anything that comes in any particular area that you're serving, that that is available. The worst thing that can happen is that your client is sending you Zillow links like, hey, here's a new property in the market, you should have done the research and you should be texting them before they send you any messages, right? Now is more important than ever that we are bringing value to the client. We have to be very professional. We're going to talk about that a little bit later, how we're going to bring value to them. Home prices overall are not changed. We're seeing that, right? Anytime you're putting in an offer, you're doing the research, you're making sure your bank appraisal contingency is in the contract to protect your client. So overall, home prices are not increasing or decreasing. They're unchanged as of last week. Okay. The rates, same. Last Wednesday, our rates were very similar to what we're seeing today, 6.49. That's a really positive thing because that's what we want to see, because we have seen on the higher end of 8%. We know that we don't want it to drop all of a sudden because then it can increase as well. If it's going down slowly and steadily, we can actually, pay attention to it and guide our clients at this stage. And the biggest question is, when will the Fed do on the next meeting that they're going to have in September? All the loan officers out there, any articles that we are reading online, majority of them are heading and saying that we are hoping for the first rate cut. It hasn't happened in months and months now, and hopefully the first rate cut would happen in September at least 0.25 basis point, right? So at least 25 basis points or 0.25%. That will have a positive effect on the whole market for the loan officers and for the realtors. Okay. All right, guys. Every meeting, we're trying to educate you guys so you guys can tell your clients, hey, when the closing time comes, don't get too excited. Meaning you want to make sure that every time you're sending any money to anyone, right? If one is the wire transfer, if it's a certified check, if you're mailing it out, you got to make sure that you know who you're sending it to. So this article shows that it was a real estate agent actually. It was a former real estate agent and her husband, they lost $63,000 to a scammer that on the last minute received the email, hey, you can wire the transfer, or you can do a wire transfer of $63,000 to this account. Right, and the names of the wire transfer is very similar to the title company. So it's very, the point is, if you're excited, you're not paying attention, you might be, your client might be sending funds to the wrong person. So what's the best thing to do here? So you can tell your client is hey, if you want to send any money or if you want to, get any certified checks, you got to make sure that you're speaking to your attorney. Right, your attorney is the one who's going to confirm the amount and who's it payable to. Right, and you should do that over the phone. It's hey, Mr. Attorney, I got this email. Should I send the funds or not? And if he says, hey, no, wait, I'm not too sure. Why do you receive that email? You should pause and not do anything. So educate your clients. Hey, on the last minute, we want to make sure that we are sending no wires without any, our attorney taking a looking at it and approving that transaction. Okay. All right, guys. Next is that what your client might ask you, hey, I like the house, but I don't know about the neighborhood. How is the neighborhood? How are the schools, right? Which software will you use for that? Right? We have RPR. We mentioned that. There's another backup software that you can use, or a website you can use. It's called niche.com. Okay? So if you go to niche.com, you can just type in the neighborhood that you want. Like this one, we have Franklin Square that we're using as an example. You can see an overall rating for that. How are the public schools? How's the housing? Is it good for families or not? Right? How's the nightlife? So you can do all this research, and you can provide that data, screenshots just like this, to your client. So your client knows that you're doing the research. Okay, it will tell you, hey, what's the population look like in that area? It's 30,000 people living there. What is their what's the median house value for that in that area? Is around 620. What's the median rent in that area? And what does rent versus own look like? Majority of the people in Long Island, we know that majority of the houses there are owned versus renting. In Queens here is 50-50. but you can see it's 84 to 16 when it comes to rent versus own in Franklin Square. Okay, you can see the crime rate, right? Different, it even actually has more breakdown of crime and safety there. Some of these guys want to see, hey, what's the education level for that neighborhood? And you can see that as well. Okay. What's the household income? Some people want to make sure that, hey, they're living in an area where everybody's making a lot of money, right? And some people don't mind. They're like, hey, I just want to make sure wherever is more affordable for me. And if they have kids, schooling is the most important part, right? They probably love the house. If there's a bad schooling around it, they're not going to pick that house for you guys. So you always have to think for your client. Like, hey, this client here does have a family, does have kids. I got to make sure that, hey, if the kids are in high school, that I find good high schools for them, right? Make that your top priority for them. All right. All right, guys. Next, we're going to talk a little bit about loans, right? Mortgage loans. As a real estate agent, we should know a few things about loans. So this way, when we're dealing with the pre-approval or when we're asking a question to our loan officer, we know at least some of the guidelines. Okay. So what is the difference between QM and non-QM? So if it's a QM loan, it's called qualified mortgage. If it's a QM, that means it's going to meet all the guidelines that is the government already have provided, right? It was like, hey, the making sure that, hey, this person has the ability to repay this loan. You guys remember what happened in 2008, right? The market crashed because a lot of people have loans that they couldn't repay. People were making maybe $40,000 as income, yet they were purchasing a house and that which they couldn't afford. But maybe their credit scores were on the lower end, maybe 500, 520, and they were still getting mortgages. It's not the case anymore, right? So we want to make sure that if it's a QM loan, it's going to follow all the guidelines. So if it's a QM loan, it's non-risky. Basically, they just want to make sure you are able to repay this loan. It has terms that it cannot exceed more than 30 years. Versus if it's a non-QM, that means a person maybe have higher DTIs. Maybe, they only want interest-only payments. No first-time home buyer would ever do that. But if it's an investor, they might choose to go with non-QM route. But if it's a first-time home buyer, if your client, you're telling them, hey, you're asking them, are you a first-time home buyer? And if they're going with non-QM loan, you need to find out what is the reason behind it. Okay? As a real estate agent, what's my goal? I want to make sure that we can actually get them to the closing. I want to make sure that they do actually qualify. We had few deals where the person is going under contract, and when they're speaking to us and they say, hey, I spoke to another loan officer, they say I qualify for this, and when we're doing it, they don't qualify because we're following the guidelines and maybe someone else is not. So you want to make sure that your client is qualified. And from there's conforming loans and non-conforming, right? So we want to go into details about that too. If it's a conforming loans, it's basically going to be following all the guidelines as we mentioned for your QM loans. Okay? But if it's a jumbo loan, that means it's going to be a QM but non-conforming. Versus, I'm going to give you examples here to make it easy for you. That if it's a QM loan, think of FHA. If it's FHA, we have to follow all the guidelines, then we know it's a QM. If it's a standard conventional loan, where we're checking their income, we're checking their DTI, and we're qualifying them based on their income, that's a QM loan. If they're getting a VA loan, that's going to be a QM. It's less risky. We just need their credit scores above 580. If it's a non-QM, it's great for investors. It's great for self-employed. If someone is working as a real estate agent, right? You guys are a 1099. So maybe you want to use your 1099's income and qualify for non-QM loans. Or we have loans where we don't even check any income. And that's going to be non-QM DSCR, right? Where we're only checking the property, seeing how much, value or the rent that property is bringing in versus what's the mortgage look like. Or we just want their bank statements. If it's a restaurant owner, right? He owns a bakery or a deli, any type of business. Maybe they just want to give us their bank statements. That's going to be a non-QM, right? It's a little bit more risky. So it's just not providing their bank statements or their 1099s. We need to see their credit scores above 700. That's a lot to ask for. But if they're going to go with a more risky loan, we want to make sure they're actually solid. Maybe their tax returns had low net income because for tax purposes, as long as their credit scores are above 700, they're providing their bank statements, we can give them a non-QM loan. Okay, so talk to your client, see which one they want to go with. Okay, so it doesn't matter which loan program that they're going with, right? While applying for a home loan, do not switch banks. Do not buy a new car. We just had this situation a few days ago. Client said, hey, my credit score dropped a little bit. I said, did you make any big purchase? Yeah, I bought a $46,000 car. If someone tells you they're trying to buy a house and then they're buying another fancy car, right? Of course, it's going to have a negative effect on your credit report, and it's going to have a negative effect on your affordability, because that $46,000 is going to have, your DTI needs to be lower now. Okay. Do not apply for new credit cards. Even if you get declined, you still get a hit on your credit scores. Okay. You don't want to be behind on any bills. You want to make sure that you're making everything, all the payments on time. Okay, and if you have any large deposits into that bank account, your lender is going to question that. Hey, your income is $4,000 per month. How come this $10,000 was deposited into your bank account? Could you explain that? Then we need to get that explanation letter and tell them either we cannot use that funds, or if we want to use it, how did it come from, right? Where did it come from? So these little things you can mention to your client. Hey, we're about to make an offer. I just want to make sure you're not switching banks. You're not buying any new car. You're not applying for new credit cards, and you're still making payments on time. And if someone says, hey, I have some funds, I put in my bank account already, how long does it need to be sitting in the bank account so this way the lenders don't question it? We call that seasoned money, and we have to wait at least 2 months for that. If someone puts $10,000 in their bank account, they wait 2 months, and after that they're applying for a loan, we're not going to question that $10,000. But if it's within those 2 months, then we will question that, or lenders will question that. Okay. So what should you remember? If I'm a real estate agent, I just want to remember that, hey, what is the minimum credit scores are required? If someone is having a conversation with me, hey, Rupinder, you just showed me the $600,000 house, but if I want to add another co-signer, but their credit scores is not great, you just need to remember, hey, if you're getting an FHA, we need to make sure that your credit scores is above 580. If it's a conventional, you're already going with a conventional loan, you want to make sure the co-signer that you want to add also has 620 or more. And we mentioned earlier, if it's a non-QM loan, we need their credit scores above 700. Okay, so 580 for FHA, 620 for conventional, and 700 for your non-QM. Okay, and it's always the worst candidate. I don't care if there's 2 or 3 or 4 people on the loan. Whoever has the worst credit scores, the lender is going to count that. Okay. Next, guys, we have is like, how are we going to compete with other agents, right? We want to be a listing agent. We want to make sure that we're controlling the deal where we have a listing. We are hosting open houses so we can build our pipelines through open houses and everything, right? You want to be a listing agent. You want to focus on getting listings if you are a licensed agent. In the beginning, it's perfectly fine to start off as a buyer's agent, but your ultimate goal should be being a listing agent. Okay, so when you are speaking to when you're talking to an owner, even if it's a for sale by owner a property, right? You want to bring value to them. So if you're just looking at the address, I would just do a quick search on geodata, on RPR, on MLS Stratus or KV Core. right? I'll just type in the address and see, or the area, hey, what are the properties in that area similar to this one? What are they going for? Wait, what is the price range? And you want to look at the market inventory. What are we competing with in that? If it's a South Ocean Park property, 40 by 100 lot size, 3 bedrooms, 2 bathrooms, how many properties similar to that are available as of today on the market? And if they are on the market, how long they've been on the market for? What's the average sale price? Right? You want to make sure that you know all this stuff for that property before you go see that seller. Okay? You want to know, just as we mentioned, different areas will be different market reports, right? Either a seller's market, buyer's market. So if you're looking in South Ocean Park, do the research. Hey, is it a seller's market or buyer's market right now? Okay? And you want to prepare your pitch. You don't want to just go there and try to shoot everything in the dark. No, you want to prepare how you want to say, you start writing down in different, different formats. Hey, how I'm going to speak about this, how I'm, going to be speaking about that, different things. If you don't have any knowledge about maybe how much does it cost to replace a roof, Google that, find out, do your research, ask me as a broker. Okay, any questions that you may have for your client, right, as an owner or as a buyer, seller or buyer, you should be asking us for that. Okay, if you need to update your listing presentation, do so. Okay, so you want to be, when you're going there, you want to look very professional, right? You want to be suited up. If you're not suiting up, at least, you want to dress up in a professional manner. You want to have all the documents that you would need, right? You need exclusive right to sell. We need your buyer's agency. We need the discrimination form. We need the property's condition form, right? All those forms should be in your folder before you're going there. Some people want to do it pre-filled and have it e-signed. That's fine. And some people want to do it wet signatures. That's fine too. Just get it done. Doesn't matter how you get it done. E-signature or wet signatures, just get it done. Guess what? Just take a pen with you. Some owners will say, hey, I don't have a pen. I don't know where it is and everything. If you have the documents, you should take a pen. It's so simple to say, but some people do forget that. Okay. Your business cards should always be there. Your folders for LJ Realty should be there. So you want to make sure you're bringing some value to them. Okay. You want to ask them a few questions. Hey, why are they leaving? Are they trying to upgrade, downsize? What are they trying to do? Right? What is the time frame? Right? Is it, some of the family members will say, hey, I want to be out of here by Christmas. Some people will say, no, I want to stay here. I want to celebrate the last Christmas here and then sell that house probably in January, February. Right? Everybody's going to be different. So you just need to find out their need. When do they need to leave? Okay? Are they going out of country? Are they going out of city, state, whatever the situation is? Find that out. So when you're talking to them, that could be your icebreaker. Okay, you want to connect with the seller, find out the reason they want to sell. You want to think about them, right? If you are the seller, if you're locked in at a very low interest rate, around 3.5%, your property value is going up. Why would you tell them to sell if they have no reason? Right? You should just connect with them. It's like, hey, whenever you need to sell, or you want to sell, you connect with me. Otherwise, that's a greater investment. You're building equity, your mortgage payment is low, you're not going to find another deal like this. Okay, so be on their side. If they have a need to sell, they're going to connect with you. You want to listen to them. It's like, hey, this is what they have to say, because majority of the time, they're going to be telling you how old are the appliances, the roofing, the flooring, everything like that. So you want to make notes. Anytime they're mentioning anything, just make notes and be honest and authentic with them, right? If you see a flaw in the house and say, hey, Mr. Seller, if you were to fix this, we can really bring up the value. I don't want people to be like, hey, we're going to downgrade this price, offer price, because this property needs this type of work. It might be minor. This is where you coming in and you're giving and telling them very honestly, hey, I honestly think that you should upgrade this so you can bring some value to the property. Okay. So we have some safety tips for them. So when you are showing them, we just want to make sure that tell them, hey, we have different people coming in to the open houses or even at the private showings. If you have something that's valuable that you don't want just laying around on the main table or on the kitchen table or anything like that, make sure that you store it in your bedrooms, right? You want to keep the place clean as possible. Repairs, as we mentioned, any renovations, any updates that you do to the property is going to bring the value up. Okay, and your seller is going to ask you, how are you going to market this, right? This property. So number one should be you're going to have a professional photographer come in. If you sign these documents within 24 to 48 hours, I'm going to have someone come into the house. I'm going to take professional photos and everything, and we're going to put it on MLS. After that, I'm going to do video marketing. I'm going to be promoting on Facebook, Instagram, YouTube, on different channels for you. Right? I'll create QR codes. So this way, when they just scan that code, they can see all the things that for this property. That code can lead them to the property page or the video page. Right? So I'm going to be promoting that offline, online. Everything is going to be coming out from my pocket. All the expenses are coming out from my pocket because end of the day, I want to sell this property for you as quickly as possible. Okay? And we want to get the documents signed, guys, right? All that talk, all that going there looking professional means nothing when we don't have these documents signed. We want to make sure that when we're going there, we're going with a pitch and we're telling them, hey, Mr. Seller, I think I've provided everything that you needed to know. You tell me if you have any questions. If not, these are the documents that I need signed so I can have a photographer come in and get started. Okay. All right, guys, that is for your sellers. Now for your buyers, right? Did any of you guys experience in the last week, anybody says, hey, no, I'm not going to sign any of your documents until you find me a house? You guys gonna hear that? Maybe you guys don't want to speak up here. I hear that almost every day now. That hey, the buyer's agent are trying to convince the buyers, like, hey, this is the law now. Before I start showing you houses, I need to get this signed. Okay, what does this sign means? Like, hey, this document I'm about to give you, right? I need to get paid. Right? As a buyer's agent, the listing agent may offer me commission, may not offer me commission. If the other party, if the seller is offering me commission, we're going to subtract that from whatever we are agreeing on right now. Okay, so I need you to sign before I start showing you properties. Or how about if the client says, I'll sign only if seller is going to pay your fees? No, it doesn't work that way. You have to agree to it. I'm going to try to get these funds from the seller side, but we can't force them. If they don't want to give it, that means you owe me this much. These are the conversation you need to have. It's not about like, hey, I'll have it later on. No, before I start showing you the houses, I want to make sure that you understand that I am not working for free. No other real estate agent is working for free anymore. Okay, before this change, buyer's agent, hey, let me just have the agency disclosure signed. Let me start showing you properties. If it happens to be I find you the property, I'm going to get paid from the seller side. I may get paid, may not get paid. Okay? So nobody's going to sign any of your documents, guys, if there's no presentation, if there's no understanding of the buying process. Right? As we mentioned in the last meeting, if someone is telling you, questioning you about title report or appraisal contingency or the home inspection, right, and you're not giving them straight answers, they're not going to be comfortable signing your agreement. You need to make sure that you're bringing value to your client by explaining the whole process. Hey, I understand you're a first-time home buyer, right? And I need you to understand the whole 9 yards. You're an expert in this field, they're not. So we mentioned this in the last meeting. I just want to make sure that every one of us have a clear understanding of this. If your buyer's agreement is at 2%, it's all negotiable, we're just mentioning it, let's just say it's at 2%, and the listing agent is offering 1.5%, that means you can only collect 0.5% from the buyer because you're getting paid 1.5% from the listing side. Okay? So you can only take 0.5 from the buyer because 1.5 is coming from the listing side. If your your agreement with the buyer is the other way around now, if it's at 1.5% and the listing agent says, hey, guess what, Mr. Hassan, I can offer you 2%, then we got a problem because you can only accept 1.5 because you said, hey, in order for me to find you the property, I'm only going to charge you 1.5. So when we're talking, the point here is that we understand the concept of this. So if you do want to get paid 2%, how can we do it? Does anybody want us to talk?
So we emphasize on the buyer agent, buyer agent commission. We have to do like at least 2%. Is that right?
No, no, it's all
If you
negotiable. It's all negotiable. Well, I'm just giving you an
no, but the thing
example.
is that the buyer already paying money to buy the house. He's paying the money, and it's really hard to even ask them a commission. Okay, 1% is quite reasonable. You know, if
Hmm.
someone told 2%, 2.5%, it's gonna be really hard.
It's gonna be
This
tough.
is Yeah, but the thing is that why is this kind of sucks? Why this rule is like, you know, if if we have 2%, 1% from the buyer agreement and the listing agent giving us 2%, okay, we're gonna get the 1% from the buyer, 1%, you know, from
Correct.
the seller.
So
It
I'm
should be
glad you
like that.
mentioned that. Yeah, I'm glad you mentioned it
Yeah.
because that is the law. The law is basically saying that, hey, you are agreeing to a certain percentage for this buyer to find a property, right? You already saying that, hey, I'm okay with getting paid 1.5%. It happens to be the listing agent is saying, no, we're offering you 2%. And then you have to tell the listing agent, hey, my agreement is 1.5%, so I can only accept 1.5%. That's the legal terms, right? Now, the way around this is to have a rider for your buyer's agreement. Since now, for this particular property, your buyer already knows that the listing agent is offering 2%, then I need to revise or put a rider for the buyer to sign at 2%. Since he knows that or she knows that, hey, I'm not paying this 2%, this person is getting paid from the listing side, I have no problem signing that document.
So
Okay?
we have to add rider instead of you know
Yeah.
do it agreement again like
Yes.
on.
We're going
Can
to
we
do a
do that?
rider for them. Yes.
Okay.
Okay? Then you can accept it. These are rare cases, but I just want to show you guys the concept. If you agreed on 1.5 and the other party is offering you more, we cannot accept that unless the buyer agrees to increase it, right? Okay? So next is that this happened yesterday that our agent, buyer's agent, sent a co-brokerage agreement to the listing side. Hey, we are about to go under contract. I have this co-brokerage agreement, and he said, hey, I am not going to sign this agreement because we have a new form, because they're going to be signing confirmation of seller's agreement to pay buyer's broker. Believe it or not, that's the title of that form. It's a long name, confirmation of seller's agreement to pay buyer's broker. It's a long name, but it describes exactly what it says there. So the form looks something like this here. Confirmation of seller's agreement to pay buyer's broker. So now this form is signed by the seller confirming that they're going to be paying you. Okay? Because the listing agent, when they initially got the agreement signed for the listing, it was there just for the listing side. Hey, the listing agent is going to get paid 2%, right? Just to give you an example. And now, since the seller is agreeing to pay the broker for the buyer, we need this document signed. So the top portion here, it says the subject property, seller's name, listing broker's name. Then you have your buyer's name and your broker's name, which is a buyer's broker, which is your name. Okay. And then it tells you the same disclaimer that we're seeing on all the forms right now, that the seller understands and acknowledges that the broker comp is not set by law or any real estate or realtor association, meaning everything is fully negotiable, right? The seller is choosing to go with this offer and is choosing to pay the buyer's agent, which is perfectly legal as long as he's willing to do it. Then it tells you here that this is what we're going to talk about, Mr. Hassan, right here. Buyers that entered into a buyer's representation agreement within where the buyer has agreed to pay buyer's broker fees. Now the seller agrees to pay to buyer's broker an amount equal to, you can put the same percentage here, because the listing agent already confirmed that, hey, we're willing to pay you guys 2%, so you're going to put 2% here. And line 4 here, buyer's broker acknowledges that the buyer's broker's payment being paid by the buyer's broker does not exceed, right? This is the key point here, does not exceed the fees set forth in the buyer's rep agreement. So it cannot go over the percentage that you guys agreed on initially on your buyer's agreement there. Okay. So the point here is that you don't want it too low, you don't want it too high. It's all negotiable. See which number you guys gonna get your buyers to agree to. As Mr. Hassan mentioned, if you say, hey, I need you to pay me 2.5%, maybe I'll get paid from the seller side. Maybe, right? How about if you don't get paid? That means your buyer has to pay you 2.5%. And that's a lot, right? So you have to be making sure that, hey, anything that you're asking for, that you're actually saying, hey, this is reasonable. If I'm the buyer, I would sign this, right? Remember the golden rule? Same thing here. You want to make sure that you're treating everybody the way you want to be treated. Same thing here, guys. Okay. And on the next page, the seller is actually signing this, the buyer is signing this, buyer's broker is signing this, and if the listing agent wants, they're signing this. Okay. So this document will go to both attorneys, and this document is the one that's the reason we're going to create a commission invoice for you guys. When the time comes to create a commission invoice, we would say, hey, do you either have the core brokerage agreement or do you have the confirmation of the seller's agreement to pay buyer's broker? Okay. So where are you going to find this form? We added this on ljagent.com under forms, buyer's agent, confirmation of sellers to pay buyer's broker. Okay. And we mentioned earlier, we have all the other forms that you guys need on ljagent.com under forms, no password needed. Okay. So a couple of ways when you're talking to your client, hey, Mr. Buyer, I understand you don't have enough funds, right? I can structure the deal in different ways. As we mentioned earlier, we want to make sure that everybody understands these concepts, right? That, hey, how can we add the commission that I want to charge to the offer? Okay, if you have an original offer of $500,000, maybe you want to offer with $510,000, $10,000 higher. So why would you want to do that? We're going to get that money back, right? That $10,000 that we're doing, we're going to get that money back. How? Because we are putting in the offer that this offer has 2% seller's concession contingency, meaning that the seller has to pay back $10,000 to the closing table to the buyer. Why would he want to do that? Because the buyer doesn't have enough funds for the closing. He, right, or she as a seller, they're still getting paid the amount that they want or they originally offered, which was $500,000. Okay. At the closing table, seller will get that $500,000. $10,000 will come back to the buyer to pay the closing cost. And that can be your agent's commission, or it could be any other part of closing costs, the title report or anything like that. The only catch here is that you need to understand that the bank appraisal value has to be at 510. Okay, whatever is the contract price, that what we need the offer to be at. That's the contract price, and that's the bank appraisal value needs to be at. Okay. If the appraisal comes lower, then your buyer needs to come up with the difference. Maybe they have those funds available, maybe not. Maybe they have to cancel the deal, maybe not. But that scenario is going to play out only if the bank appraisal value is lower than your contract price. Okay? So maybe you don't want to go through that part. Maybe how about offering lower than $500,000? Right? So your original offer was $500,000 and you're a little iffy. Maybe the house is broken down. Maybe there's a lot of things that needs to be worked on. And you're scared that, hey, the bank appraisal value is not going to be there. Then you say, hey, I don't want any of that. I just want to make sure we're offering $10,000 less so I don't have to worry about that part. So, Mr. Buyer, you owe me $10,000, but in the offer, instead of $500,000, let's make an offer for $490,000. We don't have to worry about all that bank appraisal contingency there. If it gets accepted, everybody wins. Okay? So remember, guys, this law has been in the for the commercial side for many, many years. We just got to adapt to it. We got to get used to this, and we want to make sure that we all understand it, right? The worst thing you can do is just be scared of how you're going to speak to your clients, right? It's one of those things that because it's a law now, it's like everybody's adapting to it. You want to make sure that you are comfortable talking to your client, right? If you're bringing value to them, telling them the process, telling them who's involved, what are the steps, you're going to make sure that you're going to be on their side every step of the way. They have no problem sticking with a professional, right? They have no problem paying you your fees because you deserve it. If you're not going to set up their KV Core alerts, if you're not going to send them any properties and you have an agreement signed, guess what? We're going to have a legal issue, right? That agreement is a two-way street. You not only just getting paid, you need to perform as well, right? So read those agreement, understand it, because next few months, I think that is the biggest change for all the real estate agents out there. We just need to make sure that, hey, as Mr. Hassan, we were mentioning earlier, if someone is asking for 2.5%, right, that agent better have a great experience, better have he must be a listing agent, maybe 10 plus years of experience and saying, hey, I just don't work for anything less. And I'm going to try to get paid from the other side. If I don't, you still owe me 2.5. And maybe a client will sign, maybe not. Okay, if you're a brand new agent and you haven't closed the deal and you're asking for 2.5%, I don't think anybody's going to sign your agreement. Okay, so just know what you're offering versus what you're asking. Okay. All right, guys. So how would this happened 2 days ago? Today? No, not 2 days ago, yesterday. So this was the final walkthrough, right? Final walkthrough is happening and the seller says, hey, I received 2 violations yesterday. So the violation happened on Monday. The final walkthrough was on Tuesday. Right? Everybody's in panic mode. The real estate agent is trying their level best. What is the real estate agent coming up with? Real estate agent says, both of the real estate agent, the listing agent and the buyer's agent, hey, let's get to the closing table. They're not thinking for the buyers. They're not thinking for the seller. They're just thinking for their commission check. We don't want any of our agents to do that. We want to make sure that, hey, if there's a violation, we don't know how big the violation is. We don't know how long it's going to take to clear that violation. So we want to make sure that, hey, what is best for our client? So we advise the client that either if we're going to put some money in escrow, it can't be a little bit amount. It has to be large enough so where the sellers are uncomfortable. We told them, hey, let's do at least $50,000 or $25,000. And they came out with $7,000 in escrow and willing to close. But we don't want to do that. We know that if it's a major violation, it's going to take a lot of months or, more than $7,000. It's not the best thing for your buyer. Maybe you want to say, hey, we scheduled the closing, but let's figure this out. Unless they want to put in $50,000 or $25,000 to $50,000 in escrow, otherwise the buyer should say, hey, you got this new violation, this is your problem. I have the right to back out of it. I'm going to find a new property for myself. Right? We had this issue before too, where an agent said, hey, it's perfectly fine, it looks like it's minor. It turned out to be a big violation, and it's been maybe it took them more than 2 years just to resolve it. If you want referral from your clients, right? If you want happy clients where they feel like, hey, Carvin has always been helping me out. Janet is always on my back, right? She understands that, hey, that she's on my side. Then you're going to take those decisions, make those decisions based on their interest, right? So if you run into this issue, it's going to be a hard ball. We're going to be like, hey, it's going to be, it's really, really sucks when you have a situation like that. But we have to deal it in most professional manner as possible. Okay. All right, guys, we got a few minutes left here, guys. Some of you guys are putting in values or checking geodata, RPR, but we have our bank's portals as well. If you message me or Jazz in Microsoft Teams, just the address. Hey, could you get me a bank appraisal value on this, or what the lenders will think? We can drop that same address in 2 or 3 different portals and give you guys a PDF file. In this situation here, we showed you guys, hey, this property can worth about $1 million. Okay. So if you want to do some comps, if you just want to be your helping hand, perfectly fine. Come through or just send us a message and we can help you out there. Buyer's presentation, guys. We have a new social media person now, and in the next coming weeks or within a month or so, we're going to have a new guide for you guys. We're going to be upgrading this buyer's presentation. It's going to be called the Keys to Home Ownership. And it's going to have not just the not just the buyer's steps, but it's going to have all the loan programs. It's going to be a full guide. So it's going to be really professional, that we want you to give to all your clients. So when you're presenting it, you're going to be presenting it through that, and just be prepared for it in the next coming weeks. Okay. So shout out to 2 of our agents. One is AP. I really see him grind every single day, guys. He's trying to connect with the sellers. He's trying to connect with different, his database, trying to cold call. He's really up there. Right? He has about 5 new listings. We shared all those listings with you guys. If you guys want to reach out to him and seeing how he's getting those leads, or how is he getting those listings, connect with him. Right? He's a really legit listing agent, and hopefully you guys can learn from him. And similar goes for Paul as well. We got a 6-family property right now. Paul's been with us for a long time. He's a listing agent. He's on the buyer side too, but he can really get a listing done. So, if you have anybody and any investor looking for a 6-family, he has that property available. Okay. And guys, this is the time to really know how many leads you have, how many leads are you following up on a regular basis. You guys are independent contractors, right? So we can't force you to do anything, right? Well, we can just provide you the support and tools, but you are the one who have to grind it out, right? You are the one who's building relationships with your clients, knowing their names, knowing their family situation, knowing the fact that do they actually need to move, or they don't have any urgency right now, right? All those is part of your follow-up and building relationship with your clients, right? If you want to advertise on Zillow or Realtor.com, do so, right? If you just want to promote yourself online in any way, do so, guys. Right? We have a next event is going to be exactly in about a month now, in September, in New Hyde Park. Right? We're going to have our loan officers, our realtors out there. We're going to be, sending you guys some flyers for that. If you guys can make it, it's going to be on Saturday in New Hyde Park, and just promoting yourself. Bring your business cards so we can promote each other there. Okay. All right, guys, that will do it from my end. Thank you so much for joining. Any questions, concerns? All right, guys, thank you so much for joining. I will see you guys next time. Any topics that you guys